So today we're going to be talking about the two different types of VA refinances. Now, before I start, yes, I'm a lender licensed in 48 states, and I had a client tell me I had to do this on every video, so here we go. My phone number, if you have questions or if you want to plan a refi, 707-478-0637. Yes, that is my real phone number. Yes, that is my cell phone. Please don't call me at 3 a.m. I will not answer, okay? Okay, let's get into it. So there's two types of VA refinances. There's a cash out VA refinance and a VA interest rate reduction loan. So I'm going to talk to you about the differences in both and what you should consider. Now, to be eligible for either of them, it has to be at least 210 days from your first mortgage payment. And you're like, what does that even mean? Basically, like in order to close either one of these, it has to be at least 7 months from when you first made your first mortgage payment if you just bought the house, okay? If you bought the house 5 years ago, you haven't done a refinance, you haven't, done anything with your mortgage, you're already eligible. If you bought the house 2 years ago, haven't done anything with the mortgage, you're already eligible, okay? Now, beyond that time period, the other thing to note is rates have to have gone down from where you're currently locked. Because sometimes I'll have people call me and they're like, Jen, it's time for my VA Streamline refinance. And I'm like, yes, the seasoning is good, but the market has not gone down enough to make sense, okay? So very important that you guys recognize that. Now, let's talk about funding fees, because just as a VA purchase has a funding fee, so do the refinances. Now, if you are exempt, right, you get some level of VA disability pay or you have a Purple Heart, then you don't have the funding fee, just like you didn't with the purchase. However, if you are not exempt, then you will have the funding fee. Sorry, I was being attacked by hair. So let's talk about the differences. On a VA interest rate reduction loan, the funding fee is 0.5%, okay? So on a $500,000 loan, we are talking about $2,500. On a VA cash out refinance, the funding fee is 3.3%. So $16,500 if we're doing a $500,000 mortgage, okay? I was trying to be very dramatic with my voice because I do not think people understand this or lenders are loud enough about it, but this is your money we're talking about. So when I see something big, I'm gonna shout. So VA interest rate reduction loan, 0.5% on a $500,000 mortgage, as an example, $2,500. $500,000 mortgage, cash out refinance, $16,500. Okay. Okay, but if you're exempt, thank goodness. Great, we covered that. So very important that you recognize that the funding fee is financed into the loan just like it was with a purchase. Now, do you have the option to pay it out of pocket? Sure, of course. You can do whatever you want with your money, but it can be financed in. Now, what's interesting about refinances is you can finance in the closing costs as well. So you've got your usual suspects. Does the lender have fees? Okay. Now, we all know that there's a couple big national lenders that charge 1%. That's right, they charge 1% in a lender fee. Be careful, okay? We waive our lender fee on VA loans, but when you're thinking about, looking at lenders and whatnot, make sure you're paying attention to the fees, because since the fees can be rolled into the loan, meaning that the loans increase to cover the fees, a lot of lenders skate over it, right? They don't get into the details because they know that you're not paying attention, because they'll use trigger words like no out of pocket. Oh, you don't have to bring anything in, John. Yeah, you still need to care about your money because it's going on to your mortgage. So let's say, for instance, that you're doing that $500,000 mortgage. The funding fee is already financed in, so I'll stop screaming about it just because I don't want you guys to get earplugs. And let's say the closing costs are $5,000, okay? So what would be in those closing costs? You've got title, certain states an attorney, certain states escrow. They come back to the party when there's a refi. You've got the lender. If the lender's charging a fee, once again, we waive our lender fee on VA. And then you've got the reestablishment of your escrow account. So right now, every single month you write a big check and the lender cuts it into pieces and they put your taxes and insurance in a piggy bank. With most lenders, what happens with a refinance is we have to start a new piggy bank, and then about 30 days after close, this one comes back to you, okay? And you can take that money and put it over here, or you can take that money and put it in your savings. And if you do not have any savings right now, put it in your savings, okay? But look, that's part of your closing costs. So 500K, we're just saying it's $5,000 in total, which probably is low. So what happens is your funding fees financed in, but also that $5,000 can be financed in. You do not have to come out of pocket. It's just important that you note, like let's say you're exempt, because I want to do easy math. Your new mortgage, let's say your mortgage was $500,000. If you're rolling in the closing costs and the closing costs are $5,000, your new mortgage is going to be $505,000. Really important that you recognize that. Okay, so different types of documentation. This is another very interesting thing. Cash out refinance, it's a full underwrite again. It's just like when you bought the house. So we need all your income documentation. We need to order an appraisal. In many states, we're gonna need a pest report, okay? VA interest rate reduction loan, I don't need any of that. Nothing, nope. These loans are designed to lower the rate with as little fuss as possible. Now, if we're over here, I'm gonna say 21-day close. Here, I'm gonna say 14 days or less. Okay, and it will vary by lender, but like how long does it really take to close these? Under 14 days, really I think we're gonna get it to about 10, and this one's gonna be a typical 21 to 25 because we gotta get that appraisal and you're gonna have to get a termite report, okay? So look, here's what you guys need to know as well. With the VA cash out refinance, whenever a lender's doing a refinance in general, we have to be able to prove there's a benefit to the buyer. And in many cases, that's a lower rate, it's reduced payments, but with a cash out, just the act of you getting $1,000 in cash back is a benefit. So with a cash out refinance, the lender could do a higher rate, higher fees. It could make absolutely no sense. But if you get a couple $1,000s back, it meets the rules. Yeah, it meets the rules. That's why you get so much mail that says, your VA benefit makes it so that you're eligible for a payment of XYZ and XYZ dollars back. They're programming your brain to think that that you're getting that money back because it's your VA benefit. But they're doing that because they want to do the cash out refi because there's less rules, okay, for them. Over here with the VA interest rate reduction loan, any fees charged, the total amount has to make sense over a 3-year period. So that means that the rate that we reduce, right, we have to lower your interest rate enough that when we math out how long it will take for that refinance to have made sense, it has to have been within 3 years, okay? This protects you from being in a position where lender's doing a refinance that doesn't benefit you, okay? And it happens a lot. So not here because there's rules, but over here, yeah, I've seen some really dark stuff over the years, and I can't warn you enough about it. Now, in terms of loan to value, because that's a big question I get is, okay, Jen, you told me all the scary stuff about cash out refinances. How much money can I get? Right? I don't know. Are you snapping? Let's snap together. Okay, so let's say that your mortgage is $500K. Let's say the house is worth $700,000. Congratulations, that's awesome. Look, VA cash out refinance, we can do a mortgage at what the house is worth, okay, including the closing costs. So if the house is worth $700,000, we can do 100% loan to value. No problem. Now, do I recommend taking all the equity out of your house? Nope, not unless it's an emergency or you have a really good plan for it, but it is your money. It is not my decision. It is always up to you. My job is just to give you, play devil's advocate a little bit. And, it can help. Like I've had clients where they're like, hey, I really want to remodel. And I'm like, hey, map out the cost. They map out the cost. We add that to their current. We talk about the higher rate because maybe they had a 2 or a 3%. They don't move forward. So you want to make sure a lender's willing to do that with you. Most lenders are just order takers desperate for a paycheck. I would rather that you're happy down the line and you're financially solid. So definitely you can do 100%. Here we can do the loan amount plus the closing costs and the funding fee, period. Because remember, there's no cash out. Appraisal doesn't come into play at all. Let's say that you bought a house for $600,000 and now it's worth $4 million. Doesn't matter over here. I can still refinance that $600,000, have the closing costs, and if applicable, the funding fee in there because we're not doing an appraisal. So look, both are good options. It just depends on your circumstance. And the key with either is to have your eyes wide open and to make sure that you're getting the information that you need in order to make a good decision. Now, lastly, I get this question a lot. Well, Jen, do I have to work with my current lender? No, you don't. Guys, work with a lender you like. If you liked the lender that did your loan, work with them, okay? If you didn't like them, work with someone else. Look at rates and fees, see who's gonna be honest, see who's gonna be transparent. I'm gonna be doing a video about that next week just because I had a call with a gentleman named Corey and he was telling me some stuff and I was like, woo, gotta warn you guys. So look, I hope this was helpful. Questions, comments, please reach out. I have a calendar link. You can get on the calendar, talk to one of the gals on my team. Look, we're here to be real, to be honest, and to be transparent. We'll show you our rate sheets. We'll tell you if we think it makes sense. We'll tell you if we don't think it makes sense. But we're here to be a sounding board. And if it makes sense, cool. We would love to work with you. And if it doesn't make sense, I'm glad I helped you, not end up in a terrible financial position. Thanks for watching.